So the panel we're going to have today is we're going to talk about really a couple of things. What I really want to touch on are exits, but not exits sort of qua exit, but about building big companies, building companies here in Israel to scale, and talking about maybe some of the things that may have changed or are different. We're starting to see actually much bigger companies come out of Israel over the last couple of years. And I want to talk about some of the things that may be driving that, or maybe there's nothing really driving that. Maybe it's just a raging bull market driving big valuations for IPOs and M&A exits. What I'm really excited about is the group of people who are going to be joining me up here. And so I guess like you all to come up. Dov, Len, Rona, if you guys can come up, and then we'll do the quick introductions and get started. Oh, and Larry. Sorry, I forgot Larry. Yeah, Larry. Yeah, sorry. Great. So I'll do some quick introductions. It's a great group. It's also a group that I think comes from all different kind of angles on the Israeli startup scene and the overall investing and kind of company building scene. So I guess I'll start from the far side. It's great to be working with Len again. Len Rosen is the CEO of Barclays Israel. I'm not going to read through a whole bio. It would take the full 30 minutes we have. But Len has been involved, I will say, in some of the most high-profile, largest, most important transactions, both in Israeli companies, Israeli technology, and actually global technology companies. I had the privilege of working with Len for a few years on a number of those transactions. And Len, before being the CEO of Barclays Israel, was a senior banker at Lehman Brothers, managing director at Lehman Brothers for 14 years, something like that. And so it's a real pleasure to be working together, if only for a few minutes today. Next to Len is Dov Moran. If I could say this, and I think Dov will take this in the best way possible, Dov is one of the old-timers, maybe one of the oldest timers in Israeli technology development. Dov is best known for founding and building and being the chairman and CEO of M Systems, which, if anybody doesn't know what M Systems was, I'm sure you all use his product, the disk on key, the flash drive, whatever you want to call it, that little thing that you stick in your computer to store all your stuff. That's Dov's product. I think you probably invented it in the late 80s. Yeah, late 80s. M Systems was a large public company for many years in the late 90s, and was eventually bought by SanDisk for about $1.5 billion. But Dov didn't stop there. Dov has founded, built, and invested in, I would probably say, dozens of companies since then. He currently is the CEO of a company called Comigo in the interactive TV space. We are very proud to be a co-investor with Dov in, I think, several companies, most prominently Consumer Physics, and a company that I know many of you have invested in and we'll be hearing more about later as well. Next to Dov is Rona Segev-Gal. Rona is a general partner at Pitango. Rona has been, and before that was a general partner at Evergreen Venture Capital. Rona has been involved in many exciting companies over the years. I know she was on the board of companies like Triana and Octona, some great exits over the last I'd say a couple of years. Pitango in general over the last couple of years has had a number of great exits. Most recently, I know you were involved with Varonis and on the board still of Varonis, a great IPO about 9 months ago, something like that. The company went public for well over $1 billion. So very excited to have Rona on board. We're actually looking at a couple of companies together with Pitango and looking forward to investing together and in fact invested in a company together already with Pitango. Rona's focus is on enterprise software, generally speaking. And next to me, of course, is Larry Jasinski, who I'm not going to introduce again, but Larry is the CEO of Rewalk. I think also very interestingly, and we'll talk about this on the panel, Larry has also been the founder and CEO of a couple of other companies that he sold. He had at least 2 M&A exits before the recent IPO exit. So welcome, everybody. So I'd actually like to start with the Rewalk IPO. And there are actually 3 of us on the stage who were involved directly with the IPO, Larry, Len, and myself. And Larry, I guess I'd like to start with you. There's been a lot of IPOs, Israeli IPOs, over the last, I'd say 18 months. I think there's actually been about 15 IPOs out of Israel. Some very big, some very small, some earlier than others. I guess I'd like to just kind of start with you and talk about the Rewalk process. Number one, kind of leading up to the IPO, the thought process, kind of why IPO instead of continuing to build the company as a private company, and what were some of the things that led up to that decision. And then as a second question, first for you, the IPO when it priced, and Len, you'll forgive me here, when it priced was not what I'll call the best pricing I've ever seen in an IPO, and I've been involved in probably about 50 IPOs. It priced below the expected range, but then it immediately traded up. It doubled, more or less, immediately after the pricing. And maybe you could touch a little bit on that, and then I'll turn it over to Len also on that point as well. And why do you think that happened? Do you think it had anything to do with some of the investors, maybe a couple hundred crowdfunding investors behind the company? Maybe talk a little bit about that as well.
Well, certainly. Am I alive?
Yeah.
Here we go. Yeah. First, I think I would also agree that we were probably underpriced at the beginning, but I couldn't convince the banks at the time of that. More importantly, I think the reason this one was a difficult one to price, it is such a disruptive technology that was hard to understand. As I did the roadshow process and had the interaction, we were so unique compared to anything else anybody dealt with. I think the ability for them to quickly understand and grasp the potential value was just too short a cycle. And I think that affected a lot of the institutional. On the other side, the clear physical, emotional impact of what this particular product has on the lives of people, I think lit up well within both the retail community and groups like OurCrowd. They could see the dramatic, disruptive nature, and were able to look further down the road at what this can be and what it's likely to be than I think the traditional forces did.
Len?
So first of all, let me just say thank you for having me on the panel. I've been following OurCrowd for a long time, probably since its beginning, and I'm very happy to be here. I think your business model is incredible and the innovation involved. As far as Rewalk is concerned, we were the lead book runner on the Rewalk IPO. We are just extremely proud of that deal in particular. I think it is a great messenger of the innovation that's coming out of Israel. So in addition to the financial story, just the ability to have got that done was extremely important to us and to me personally. It was a difficult deal. I don't know how much detail I should get into, but on the institutional side, there was difficulty in understanding the story. However, as you implied, Elan, and I think we're all looking at OurCrowd and how it's going to, how your many future IPOs are going to play out. There was a hell of a lot of interest from around the world, from tons of people on the first day and going forward, and that fed on itself, and the stock did extremely well. Circling back, I think you saw a lot of institutional investors who sat out, who have said to me since, yeah, we thought maybe we'd get a chance at a lower price, but we didn't. And they were extremely interested in that, and I think they bought in the aftermarket as well. So I think you're seeing a very attractive company with a great story that people like to hear and people want to be part of. It's credit to Larry and his team as well.
Let me just stick on that point for 1 second. I think one of the questions that comes up a lot in building companies and thinking about the timing of M&A or IPO or kind of next steps of financing, whether it's public financing or private funding, is the stage the company is in, right? And one of the things people have talked about quite a bit in Israeli companies going public, I mean, we used to talk about this a lot, is it too early? Is this ready to go public? And Larry, you and I talked about that probably a year ago. What was the right timing? Is there a too early? Is there not a too early? I guess I'm curious, and maybe Len, you could talk about it. Does it matter? Does it depend on industry? In other words, here's a company which, on general metrics, one would think was too early. Small revenue, Larry, I think you'd agree. Just got FDA approval, and nonetheless, it was fairly successful, though it was tough to get the deal done. Is the industry important? Is the type of company important? Does it matter when thinking about the timing of an M&A or an IPO?
Sure. Yeah, the industry is important. The timing is very important. I mean, we had an environment in 2014 where in the early half of the year, in the first half of the year, it was really just a search for growth. Growth at any cost, growth, growth, growth was all anyone spoke about. And there was a disconnect sometime in mid-year where people started looking at value far more. And towards the end of the year, it's kind of reconciled itself for where it is right now, which is hot sectors. People will look at growth, those types of cyber. For example, we did a deal for a company called CyberArk, which was very hot. Hot sectors, people will look at the growth. Other sectors, people will look at the valuation. So that's an important factor. Industry, obviously, is an important factor. Biotech is far more likely to go more early. Don't know where that environment is going right now. But all of these things are very important factors playing in. I mean, I can tell you, and you remember this, that as bankers in Israel, and we're the leading bankers in Israel, we are always faced with companies that want to go too early. We resist taking them public too early. And obviously from the results, you know, the time was right for Rewalk to go.
Great, and that's actually, it's a great segue. Maybe I wanted to turn to you, Rona. You know, you are involved with a company called Varonis, which was founded, I'm going to guess, 6-7 years ago, maybe more, 8-9, and went public early this year, well over $1 billion when they went public. I wanted to kind of touch on that. You know, it's obviously very different than the situation we've been talking about, Rewalk here. Varonis had staying power, right? Like a CyberArk, like a Mobileye that's been touched on already. Company that was built from the ground up. I mean, we talked about this. You told me you remember just when it was basically just a PowerPoint idea. So maybe talk a little bit about that, almost from the other perspective of timing. I imagine there were M&A offers along the way with a great company with deep technology like that. What are some of the factors that allowed that company to have staying power, drove the company forward, and allowed you to wait? And then when the company did decide to go public, what was the decision-making factors? How did you get to that decision, the investors and the company together?
A lot of questions. I want to touch on two companies, actually, Czech and Varonis. Two companies that, one of them is my partner's company, Czech, it's a ton back. But there are two companies that from the beginning it was very clear that those are good companies. And the problem with good companies is that they are getting M&A offers all the time. And it's very tempting for the founders and the VCs to sell the company and take the money and run away. And it's a very conscious decision to continue to take the risk and to continue to build the company. And the thing, and we talked about that, what happened in Israel? Why are those people are trying to build big companies? And what I saw in both companies is that the founders, the entrepreneurs, had this passion to really control the market. So if you look at Yaki Faitelson, who is the CEO of Varonis, his passion is not just to make money. He really wants to build the next checkpoint. And it's the kind of passion that enabled him to say no 3 times to an M&A offers along the way, and to decide to go public. And I must tell you, this was my first. I had numerous M&As, but this was my first public offering. And just after the IPO, a few months, I realized, well, this is not an exit. This is just a financing event, okay? What's kind of disappointing. But you just need to continue in building the company, and this is a very conscious decision. And we all sat around and we said to each other, okay, we're in it for the next 5-6 years, and it's strange for a VC. I should go away now, but I looked at Yaki's eyes and I said, well, this is our road together, and we will continue it together, and this is what we're doing. The decision to go public for him was very, very natural, and also for me, because I understand that his passion is to build something big. Okay, because in 2013-14, you can sell those kind of companies for a very high valuation, and it's a very, very conscious decision. What are you trying to achieve? With Czech, it was a little bit of a different story. Czech got several M&As offer, grew very, very quickly. At the end of the day, when the founders got an offer to sell the company for almost $400 million, they just sold it. Okay, but. Again, it took them 6-7 years of working very, very hard and deciding not to sell in the middle until they got there.
So it sounds like it has to do, number one, or somewhat with, I'd say, the personality even, or the goals and the aspirations of the CEO, as well as just where that company fits, and does it make sense to continue to build it through being a public company?
I think it's a combination of the CEO personality, and also I think it's very, very important who are the VCs around. I think it was very, very important that Pitango is a very, very big VC that is looking for big exits, was around, so there was no rush to see an exit. So it's a combination.
So that leads me to Dov. Dov, you have built companies from the ground up. You had a public company for many, many years, and then eventually sold it in an M&A. And you continue today to be incredibly active, both as a builder of companies and as an investor. I know some of them you invest in and you build, some you just invest in more passively. I'd love to hear your thoughts, kind of over the years. How have your views maybe changed in terms of public offering, wanting to build towards a public offering, wanting to M&A, or maybe just continue to build a nice private company that's yours, that's not an M&A. Have your views changed on that? Does it make sense? Is what makes sense once, what makes sense the second time, or is every company different? Love to hear your thoughts.
Thanks. And I'm joining the rest with thank you for inviting me and us, actually. I want to say something which is very, very smart, I believe. Many things which are smart. But one which caught my attention, she said that actually the IPO was a financial event. IPO is practically a financial event. The CEO is not supposed to leave. If he's a moral guy, he will stay with the company, go on, grow the company for the investors, for the owners, and for himself. The question of can Israel grow, or can large companies, or can we grow here? Large companies came several times. I do believe that this is clearly a possibility. It's a matter of progress. You know, tiny companies, many disappear. The better ones are becoming small companies. Then the ones without the right capabilities disappear. There are medium. This whole process began in Israel of building company. Began in Israel a bit after the US, but we are reaching and seeing more and more companies growing into very large. We see more and more entrepreneurs that are running companies with the target of create something real big and not just do something small, large for themselves. And I think that the progress is very positive. Absolutely.
Great. So again, great segue into kind of what I wanted to talk about next. Over the last 18 years that I've been in Israel and been involved in the investment community here, there's kind of this debate that goes on. Can Israel build big enough companies? Do we build them big enough? Do entrepreneurs just sell out too early? And sometimes the debate makes sense, and sometimes I feel like it doesn't. It probably depends on what period we're in. One of the things, though, that's really fascinating is that over the last 18 months, it feels like something's changed. There have been 9 exits, I believe, over $1 billion in the last 18 months. I believe 4 of them, or 3 of them are IPOs. A number of very large M&As. The Mobileye, which was discussed already, was founded many years ago, 15 years ago at least, probably more. And had incredible staying power, is now raised over $1 billion and trades, I think as of today, about $7 billion valuation. CyberArk is another great example. Wix, Varonis, and the list goes on. And those are just the IPOs. I'm not even talking about the M&As. I guess the question is, has something changed? Is something different here? Number one. And number two, is this sustainable? And I'll first turn it over to Len. And I'm curious, has something changed among Israeli companies, Israeli entrepreneurs? Or is this, I don't know, a global bull market? We're at all-time highs just about. Is it a combination of the two, or is it just a cycle?
First of all, there's a global bull market. So, you can't get around that. It's been an all-time record year for IPOs out of Israel. In the world, it's a record year since 2000. So, the market's been fantastic. As to whether anything's changed, look, there are a lot more larger companies. I think we all have had the view for a very long time that the biggest success is to build a big company in Israel. There used to be the discussion, why can't we have an Israeli Nokia? Now, Good that we don't have an Israeli Nokia. But you know, my tendency, and that's a great debate. My tendency is to believe that that is still the best possible outcome. We were a book runner on Mobileye. We're very happy about that. We were a book runner. I'll keep plugging Barclays. We were a book runner on Varonis. Very happy to keep building. We sold Given Imaging for $1 billion for 850 plus liabilities, $1 billion earlier this year. We're very happy to do the M&A as well. The problem with M&A, and we weren't involved with Waze, we wish we were, and Onavo, and we see all these companies, and it's fine. You build a big R&D center in Israel. We're able to talk about how Facebook is here. We're able to talk about how Google is here. That's extremely important to the ecosystem. But we've seen downturns. We've seen the news articles about shutting down R&D centers. Hey, you know, nobody these days wants to talk anything about gloom and doom, and I don't. But I have to mention that if you look at what I think is better for the longer-standing economic security of the country and the longer-standing growth of the tech economy that you guys are such an important part of and that we're very proud to be part of, I think building the bigger companies is more important, and that is happening.
So, first of all, Len, I know you would not talk about doom and gloom. I know you too well. So, but actually, I'm curious, Dov, if you could comment on that, because one of the things that we think may have changed, and this, maybe probably not as powerful as the global bull market, but we think is really important in what we see, is serial entrepreneurship, right? So, entrepreneurs who have done it once, twice, 3 times, they've built companies. Dov, you're a great example of that. You've been involved in some incredibly successful companies, some less successful companies, and sometimes the way I look at this is, well, it's not all bad when an entrepreneur sells a company, even if it's a small sale, a big sale. We like bigger sales, and then they come out and they do it again, right? They build the next company, they create a lot more jobs and a lot more part of that ecosystem. So, how do you look at that, Dov? Is that part of what's driving this?
I'll try to explain it. When there is a company, in a company there is R&D, engineers, programmers, whatever. There is sales, logistics, marketing, administrators. It's part of the life of a company. When an Israeli company is bought by a US company, usually what happens is that the R&D stays, even grows sometimes. Great job for engineers, but the rest disappears. No logistics, no marketing, no sales, actually no managers that can grow and become managers of larger companies. The knowledge, the experience of becoming or running large companies disappears. So therefore, it might be great for the entrepreneurs, it's not great for the country. Now, clearly, there should be balance between what's right for the country and what's right for the what's right for the owners or the entrepreneurs. And clearly, sometimes companies need to be sold because that's life, because the right thing for the company and for the owners is to be sold. Sometimes the right thing is to grow, and let's hope all of us that we will succeed to really grow in this country. Not Nokia's $70 billion valuation, I think, at some time, but companies with a value of $1 billion, $5 billion, and maybe even $10 billion. What's the value of Checkpoint now?
12, 13?
$12 billion, yes. And clearly Teva, which is not high-tech, but it's amazing company with great valuation.
Right. So on that theme, Rona, you mentioned Varonis before, and you mentioned that there were, I think you said, 3 M&A offers along the way. And yet the right thing to do, it seems like for the company, and what we think it sounds like for the country in many ways, was to kind of have that staying power and build a very large, successful company. Along the way, though, there can be friction. There can be some of those frictions between the investors. You mentioned who the VCs are makes a big difference, and the entrepreneurs. How do you help a company get there? How do you convince them, if I could put it that way, or work with them to make that choice? Because sometimes M&A offers come along, we say no, and then it doesn't end so well the next time around. So Talk a little bit about maybe cutting some of that friction and building a consensus around the table that the right thing to do is to build into that billion-dollar company.
Yeah, I just want to say one word about what is happening right now. I think in 2000 we saw, I joined the industry in 2000 actually, 99. After I sold the company, I was an entrepreneur. And the success back then was of entrepreneurs that just, made it, and like after a year they sold it for a few $100 million. It wasn't really companies that were built for years. What is different right now in the last 2 years is those are real companies. Those are companies that people were building for the last 7, 8, 9 years. So the impact on other entrepreneurs is very different. I had phone calls from all my CEOs after the Rewalk IPO. We want to build companies like that, okay? And this is a real inspiration for other people, okay? It's not just pure luck. In terms of friction, there is always a friction between VCs and entrepreneurs. And I think smart, modern VCs understand that this friction is actually bad for them, okay? And the way that, in order to build a big company, you need to realize that you can't just assume that the entrepreneur will take all the risk. So if there is an M&A offer and the entrepreneur, which usually comes from, a middle-class background, a middle-class background, could sell his share for $30, $40 million, it could totally change his life. You cannot just assume that he will give it up and move on with your dream to build a big company. So the thing that you need to do is to understand what the motivation and what are the fears, and to solve it. And there are easy ways to solve it. You can just buy shares from the entrepreneur. You can give him some money to reduce his personal risk. And we've been doing that, and it's working very, very well. But this is just one example of things that you should do in order to align interests between VCs, investors, and entrepreneurs.
Great. Larry, I wanted to actually touch on something else. You're now CEO running a public company. Your first public company that you've been the CEO of, you were at Boston Scientific for many, many years before that. Boston Scientific?
Yes.
Yeah. But before that, you sold 2 companies. And I actually wanted to talk to you a little bit about what you're seeing now, particularly in the Israeli M&A ecosystem, right? We've got hundreds of global companies with R&D centers on the ground here, as Len mentioned, and they're hungry, right? They're hungry for buying Israeli technologies, Israeli companies. I'm sure you were approached several times. One of the companies I'm sure you know well from the Boston area, Covidian, did the Give an Imaging deal. Again, number one, is this sustainable? Is this something that's going to continue? Are these companies here in Israel continue to remain hungry for Israeli technologies? And valuations have also gone up. Valuations are now about 5 times almost what they were, maybe 4 times what they were in 2008 if you look at the average M&A deal price. Again, probably some of it has to do with the bull market that Len alluded to. But what do you see in the ecosystem here in Israel in terms of that M&A? Is it healthy?
Well, the ecosystem here is very healthy. That's why I'm here. That's what brought me here. I've lived on both sides of the aisle. At Boston Scientific, we were buying things. With Rewalk Robotics, the thing that attracted me to it, and I think has attracted our talent to it, is there's a passion of a mission of building a company and building an industry. And we can do that very well as an Israeli company, but on a global scale. Because we are going to have to add technologies that are probably outside of Israel, but they'll be a part of this Israeli-based company. So I think the environment for us, the IPO I stated was a beginning, and our intent is to build a large-based company, and very little interest in M&A. I have to answer to shareholders at some point on that, but the opportunity to build is probably the driven factor, and the passion of the current investors and the management team is a long-term build of the company, and an environment allows it.
Great. So as Len knows and as John knows, I could probably sit up here and talk for hours and continue to do this, but we're about out of time. I want to throw one more question out to everybody. We've got a few hundred investors here, some professional investors, some angel investors. This is a panel that's got probably collectively 80 years of investing and company building experience. So I'd love to throw out to you, if you've got 30 to 60 seconds, what message would you give to the group about when looking at angel investments through OurCrowd or anywhere else for that matter? We hope it's only through OurCrowd. What would the message be? What would the advice be in Israeli investing or any other? Len?
Okay. looking at Mobileye, just because it was I mean, for those that don't know, $1.02 billion IPO, they were extremely focused on who their investors were. They did, I think, something like 7 rounds of financing until they got to their IPO. And by the way, there's another message there of patience, but that's not the one I'm dealing with. Who their investors were. They came in with early founders, et cetera. They brought in brand name marquee investors along the way, all the way until their last round where they brought in Fidelity and Wellington and what's a rather new innovation as a pre-IPO round that demonstrated how great the IPO was going to be. Look at your investors. Look at who your partners are going to be. OurCrowd is a great choice for the early stage. Pitango is a great choice for the early or next stage. And be patient. And there's an extremely large amount of opportunity if you wait it out and surf the waves.
Okay, I'll say something which I'm not sure that you would love. Don't invest in Israeli companies just because you're a Zionist. But there is a but, it's a big but. Invest because there are great companies here. They'll make for you a lot of money. And when you do that, you need to have in your back of your mind that actually while doing it, you are a great Zionist, you are helping the country, you are helping those companies, you are helping us to become a better country, more successful, and just a better one.
So just one word for OurCrowd is that I heard Jonathan 2 weeks ago giving a lecture on OurCrowd, and I was shocked to see how much money you actually invested in the last year. You are actually the biggest VC in Israel right now, so just know that. I can compare you to the biggest one. I read an article, a really interesting research that a group did on exits, successful exit on the internet, and they said that the most successful exits actually had 2 pivots along the way. Less successful companies had more pivots or no pivots at all. And I took from that one lesson to myself, that if there are still question marks in the company, it's okay. Okay? If the team knows how to answer them, they know how to pivot, they know how to change, it's okay. This is a good team. This is a team that can actually adapt to a changing market conditions. And this is happening all the time around us. So just one.
And really 2 comments. One is my perspective in what I had done in the United States and coming to Israel. One of the reasons I probably was most attached to this one is I saw the environment in Israel as more conducive to what we were trying to do in the early stages than what I found in the United States, Europe, and other places. And we moved faster, and we've stayed ahead of competition. So that was really one element on Israel specific and why to come here. The other piece, though, I think is the long term. Who are your investors? Because once I believed in the product and what we could do here, I really paid more attention to who our initial board was. Was it a group that was going to look at this for a long term? Because I wanted to build something. It wasn't looking to do anything quickly in terms of a quick exit. And those 2 factors are really the most driving ones to me that has made Israel work well, and groups such as OurCrowd and the venture groups we were able to align with.
Great. Thank you very much to a great panel. Thanks very much to everybody.